Lululemon, whether or not I think they're a buy. What happened to my slideshow? Here, go back here. What are another thing about buy and basically what I'm doing in terms of the stock. So, not investment advice. I actually have bought 34 shares, a cost base of 295.65. Earnings are this week on June 5th. So if earnings go like okay or better, like if they meet their expectations, I'll be fine. If they miss earnings, I'm going to get crushed. Which, to be honest, you could say this for any company. If you miss earnings, you're probably going to get crushed. And then, of course, I don't care if you buy the stock. This isn't like a pump, or I'm not a bag holder yet. But you should do obviously whatever makes sense for you. So let's start with the big issue with retail. The number one issue with retail, there's two big issues. One is like it's very much a fad thing. So whatever's in will do really, really well for a period of time, and then when it stops being a fad, it will get replaced. So like when I was a kid, I can remember like all the different phases I went through as a kid. Like there's a period of time where like Hot Topic was cool and NFTs were cool, and then it became like Abercrombie Fitch and Hollister, and then I don't know, later on in life it probably became like whatever. I don't even remember. PacSun. So it's very normal for like a company seem really well, they have great earnings, great numbers, and then suddenly the consumer taste changes. It's also hard to build a moat. It's not hard to copy what someone else is doing in fashion. So Lululemon, for example, build yoga pants. How many stores can you buy yoga pants now, right? You can go to Walmart, you can go to Target, you can go to like Nike, wherever. You can buy them everywhere. And then this is kind of like not a huge like the last one, but I do think that like kind of the business of retail is hard to manage because you're constantly designing new clothes, getting them on the shelves, trying to sell out of all your inventory before the end of the season, and then like clearing it out and then repeating. So I do think that can be tricky. You can't just like build one product and just incrementally improve it. You're constantly like redesigning and tinkering. So we're gonna brand is really, really powerful in general in any business, but it's especially powerful in fashion. So like one thing you'll notice is like Gucci and Louis Vuitton and Rolex are all really powerful brands. They're relevant today and they'll be relevant 100 years from now, right? That's not even a question. But and you see this a step below where you have something that's like a little more premium. A great example of this would be something like Doc Martens or Levi's, where like they're expensive, but and they're like kind of a timeless brand. And I fully expect both like Doc Martens, Levi's, maybe um, uh, like North Face. I don't know. I think that brand got bought, so maybe got ruined. But all these kind of expensive but like nice but like premium clothes tend to do pretty well no matter what as well. And there's a balance of like brand and quality in there. So Lululemon is much more that premium brand. So they have what basically vertical integration, which basically means they're just responsible for everything. So design, production, and sales. And this is really important because it means they control their brand from beginning to end, right? So they can maintain the quality of their brand. The biggest concern when you're buying a company like Lululemon is like really the value of the company is in that brand. So if they are outsourcing or you have someone else who's control or something could change, it could threaten the value of the brand. Of course, it affected the value of investments. Things they do to protect their brand is they don't do B2B, so that you won't see their clothes in Walmart, you won't see their clothes in like a Dick's Sporting Good, anything like that. You can only buy it in their stores or you can buy it on Amazon, right? Which means they have complete control over how people view and access and represent their brand, which is really important. They're I guess pioneers in athleisure wear, which is basically clothes that are comfortable but also useful if you need to like go work out. This is super useful, I think, for everyday people who are just busy with their lives. It's a great balance of like basically dressing if you need to chill or you need to go out, or you need to like go shopping and then go work out. Is kind of a good balance of everything. Other things that I think Lululemon do well is how they advertise their product. They use brand ambassadors, and the brand ambassadors like everyday local people in your community. So a lot of times with these brand ambassadors, the way they pay them is by giving them Lululemon, which is expensive clothing, right? So these brand ambassadors get paid through clothing, which is not expensive for Lululemon, but they also have a brand ambassador that's attainable. If it's your everyday yoga teacher, that's someone you can actually be real like because they're a real person, right? When you're selling Michael Jordan, most of us are never going to be Michael Jordan, so it's much harder to sell. And then they also sell premium pricing. All their clothes are like $100. So they do sell good quality clothes. And then when they're expensive, it does make them harder to become like a true fad, because a fad, everyone has to be able to have it. When everyone has it, it's not special. So basically having this like kind of luxury price, I do think helps quite a bit. So let's talk about the main risks here. Two big risks is Ali Yoga and Viore. The main one of these is Viore, I think. Ali Yoga, while they do have like a lot of followers on Instagram, if you go look at their Glassdoor, it's a very clearly toxic place to work. I don't think their products are highest quality. I think they look better, but I think you're spending a lot for basically not getting quality, which is kind of what people want. Viore is definitely the much better competitor and definitely compete on a much closer level with Lululemon. They're kind of the smaller upstart. You see, I mentioned this here basically though, like 5K followers on Reddit, 500K on Instagram. It's a much smaller brand right now. So while these compete, it's like they have to grow pretty significantly in order to take Lululemon's market share. And in general, this athleisure is growing at something like 5-8% a year, or expect to grow 5-8% a year until 2030. So the entire market is growing. So I guess what I'm saying is like there's room to share the market as well. All their supply, everything is in Asia. So like their fabrics are in Asia, like the actual production of their clothes are in Asia, right? So if they have like major instability in the region for whatever reason, it would affect their businesses significantly. And honestly, this is true for like virtually every company. Um, and then of course, yeah, like I mentioned here, they could just be a fad. That's like probably like the biggest risk is they become super popular, and then that brand gets ruined. So I guess we'll see what happens there. What I like about the company, I really like their Glassdoor. I actually look at Glassdoors a lot, so you can see great approval of their CEO of Calvin McDonald, and then of course, very good workplace to work. A company is always going to do better if people are excited to be there. People want to be there, right? And the better a place to work, the longer people are going to stay, the lower turnover you're going to have, and the less turnover you're going to have, the better employees you're going to have, right? When people, I mean, it's not always the case, but when people are like at a place for a long time, you never get better and better at your job, right? When you're constantly switching jobs, it's takes 6 months to a year to ramp up. So you have people there who work together, who know the culture, who are committed. I just find that stuff invaluable. Yeah, year income here, really supposed to say yearly, obviously. This was from 2023, and I think they have a lot of really useful statistics here. So right here, you can see their gross margin is 58.3%. So this means for every $100 of product they sell, they're taking home 58 point. The cost of goods is only 42%. So this is actually one of the highest margins in the industry. Other companies like Nike, I think Nike's like 50%. I think Adidas is even lower. So they have much better gross margins on their industry. I think their net margin is like 12% maybe, and that's like what they take home at the end of the day after like everything, taxes, expenses, all that kind of stuff. So in general, you can just see like it's really actually this is the margin that I cared most about. You can see their net income here. So this is a really powerful revenue growth here. And really what's most important we want to be looking at is this China, mainland, and rest of the world. So obviously this is growing, I don't know, this is like 20-30% for 21 to 22. And then here's like probably a little over 10% between these years. But you can see from 21 to 2023, we had 100% growth. So we're growing at 50% on average year over year. And then we almost have 100% for the rest of the world as well. So their general revenue growth outside the United States, or North Canada and the United States, is growing very quickly, which is very promising. The other thing I think is very interesting is if we're looking at the historical PE of Lulu compared to other publicly traded companies right now, you can actually see Lululemon is trading at a slight discount and compared to like Nike, Adidas, and Puma. And what I will say, by the way, is like these are more established brands. That's why they have higher and more established P's. Like Nike is always going to be a safe investment. So I'm not like I don't want it to be like too misconstrued or too misleading, basically. But just something to keep in mind. So in general, I think Lululemon's traded historically at a P of probably 30 plus. So they're definitely historically cheap. Now, that doesn't mean they are a good buy. You can have contraction in terms of like their price and earning if their revenue growth is slowing. So this could just be really a reflection of their future as opposed to them actually being cheap. Now, I personally do think they're cheap, and that's obviously why I bought the company. They've never not grown revenue in 20 years on an annual basis, which is pretty crazy when you think about it. So every single year they've increased their revenue for 20 years. And that's through things like 2008, which was a major recession, obviously through 2020, which was a weird year, was COVID. And then, we've had some flat and, slightly down years in between there as well. Another thing I like is they have $2.2 billion cash with zero debt. Their balance sheet's really strong. So if anything were to happen, they would be fine. They could basically make no revenue or income, and they could still operate the company for like a year or two, which is pretty crazy. Their shares outstanding they've been reducing their shares outstanding, 11% reduction over the last 10 years or so, which is really good. It's annoying when companies constantly dilute their shareholders, so seeing a reduction in shares is really good. I already mentioned their gross margins, but yeah, their gross margins are actually above Google's, by the way, if you didn't know that, which is kind of crazy. So here's the actual revenue growth. So China was 32% in 21 to 22, and then 67% between 22 and 2023. And then we can see here 29% for the rest of the world for 2021, 2022, and then 42% for the year following. So ideal scenarios, they can maintain at least 30% revenue growth for China and the rest of the world over the next 5 years here. So, as you can see, actually it's not listed here, but their revenue growth from last quarter to this quarter, the first quarter of 2024 to 2023 was only 7% in the Americas. So it is slowing down, and that's actually why people are like a little bit, bearish on the stock, is because of the reduction in revenue growth. But for me, the fact that they're growing out pretty well outside of the rest of the world is a very strong selling point. So even if they don't maintain double-digit revenue growth in the Americas, which I think is likely they won't, I still think they'll have double-digit revenue growth because of their growth outside of the Americas. And to be honest, I think it'd be kind of crazy to see this revenue growth out in the rest of the world, and then for it to suddenly stop. I think this is something you'd see like a more steady decline as opposed to. So I kind of fully expect this growth to continue. The ownership of the company by the executive team isn't great. It's only 0.5%, which is not a lot. I mean, fiscally, it's like $500 million is quite significant, but or maybe $2 billion actually. But they do have to have a certain amount of their base salary in the stock, so at least 3x base salary for everyone except the CEO, who needs 5x. So they do have like a good amount of ownership in the company to a certain extent, but not quite as much as I'd like. But it's kind of hard when you don't have a founder-led company to have anything better than that. So just inclusion, I know people expect me to do math and calculations. That's just not really my style. I think relative to the power of their brand, their historical growth, their future growth in the rest of the world, their pricing, I think they're actually a pretty good price right now. So as of today, I'm up like $15 a share. So let's see what I'm up total. I'm up $550 or 5.5%. So again, it's kind of, we'll really see how things go this week in terms of I'm just getting in terms of earnings call. So I'm hoping to see just decent returns. I hope they just meet their guidance, and I think if they meet their guidance, I think I'll do pretty well on this. So yeah, that's my Lululemon analysis, and I guess we'll see how things go.